look like my mic is picking up. Let me get that fixed. There we go. Now we've got some volume coming from YouTube, guys. So this is an educational room. This is an informational room. This is not a, hey, let me call your trades room. I refuse to do it. I won't do it. Can't do it. Shan't do it. So there's our little disclaimer. We'll probably see it again before the day's over. News today, guys. 8:30 a.m. there was the Empire State Manufacturing. It was medium impact. No big deal. We do not have crude oil inventories today. You crude oil traders that are accustomed to seeing that on a Wednesday, because of the holiday, they push it back a day. So don't panic at 10:30. There will be no crude oil inventories. Really not a whole lot going on in regards to news, really, for the whole week. I guess when the government shuts down, they don't have anything to say. Good afternoon, Miss Jen. Nice to see you. So, guys, we're going to go business as usual is exactly what we're going to do. I'm going to try to streamline the morning a little bit so that we can spend as much time as possible in the live market. So let's get busy. Dun, 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 dun. Ninja Trader and TradingView, guys. Welcome to Nexgen. It doesn't matter which platform you're using. We will talk about three rules, couple trades, and man, you're gonna get everything. I can see you. You have a lovely smile. I got LASIK, Jen, so you know, supervision at this point. One day we'll all hang out in a room and talk about trading. It'll be fun. Get to put faces to all the names. Guys, there are two platforms that I discuss every day. Ninja Trader, we've been doing for a long time, guys, and it uses dynamic Renko bars and workspaces based on the size of those bars, and it will be different than TradingView. There you go. Yeah, Ron C's got to join. It's funny. My wife has a job offer in Georgia, and one of the first things I did is like, how far is Myrtle Beach? I need to play golf. Kind of good. Sounds good, Victor. Or if you need, I can do the read right now to make sure that you don't miss it. And guys, this is part of class is making sure that you get feedback on everything that you do. So if you ever have to leave, go, hey Mark, I got to get out of here. Doctor's waiting for me. Talk to me about what I did. So let's see what you did, Victor. You said trend trade. The triggers are up. The price are in transition. You had clear skies, which I love. Small chart, triggers rolled. You entered on a down bar, right? That's a challenge sometimes. Nope, you didn't. You got in on the up bar. And then it's just because you waited for it to close, nice job. It looks like you entered on a down bar, but you didn't. Stop was perfect below the pivot low. And you're in at 98. First contract's off at 05. Nice $140 there. And then at 02, let me look at your prices. Where was 02? So 02, Victor, was an HVA and a zone with odds favorable momentum. So if I were going to give any sort of feedback here, with all of that momentum, that HVA line is an actual, it's a trade. It's a beautiful look for an entry with that much momentum. It's hard to sit through. It's hard to keep risk on a trade. I totally get that. But there's a huge difference between being right inside of a zone at an HVA and being maybe 4 or 5 ticks below that zone. Force that zone to break a little bit, and instead of just offering yourself on the altar to all that momentum, to that clear path. Does that make sense? It's a beautiful trade, and I would never be mad about $215. Maybe a little management opportunity. When I've got those super strong triggers and I've got zones and I've got HVAs, I'm enticed. I may hold and see if they want to push up to the next zone. You'll have to make your own decisions on management, but that's a great thing that I can notice right off the bat there. So I've gotten in the habit, Victor, when I'm managing trades. And guys, TradingView has been a journey for me the same way it has been for you. I started at zero just like all of you guys. And I'm in this constant state of what do I see? What can make it better? How do I manage more effectively? How do I hold for bigger moves? When should I get out? And when I've got strong triggers on that small chart, and I've got things protecting me, I'm a huge fan of giving things a chance. And that's just me. So management is very personal, guys, and we all have very different risk tolerances. We've got different pain thresholds, and you have to know what yours is. But this is one thing that I've started to notice that I'm beginning to record a little bit, Victor, is when you've got really strong triggers and it's broken through, if I can define an entry, and when I say if I can define an entry, if I can define a momentum trade from that HVA, I don't want to get out of that HVA. I want to make them blow through the perfect entry. Does that make sense? Great trade, Victor. And guys, this is part of what we're going to do in the second half of the day. So there's a little sneak peek for you. We're going to talk about both platforms. And we're going to talk about reading your charts, guys. This is my job. This is, if I'm putting it on a resume, looking for a job, and people say, Novak, what have you done for the last 6 years? Guys, I've taught people to read indicators. I've taught people to recognize advantages. I've taught people how to recognize and how to capitalize on the memory that the market seems to have, because it repeats each and every day. We talk about 3 trading rules. That's consistent regardless of which plan you're on. On NinjaTrader, we call it the high probability trade. On TradingView, we don't have a fancy name for it, but it's just a trend trade as well. And there's rules. And rules describe the pattern. And the pattern is consistent, guys. It happens every day. And it doesn't matter if you're on NinjaTrader or TradingView. It happens every day. And when you learn to read your charts, you begin to realize that reading charts is most of your day. Trading isn't most of your day, guys. Trading is boring. I took 3 trades yesterday. That's it. Just for reference, I follow the plan that I'm going to give you for TradingView. And I took 3 trades. 3 times my rules were met. And there's this idea that about 10% of your day is actively trading. So if you sit in front of your computer for 6 hours, you might be active 36 minutes of it. The honest answer is you'll probably be active maybe 18 minutes of it. We took a high probability trend trading class yesterday. It took up 6 minutes of our day. It felt like forever because it wasn't running straight to the profit targets, but it got there. And it did everything the indicator suggested that it would. So learn to read your indicators, guys, and you'll understand things like where the market is likely to continue. This is entry points. This is where you can say to yourself, man, with this look here, that's my entry. That's where the market is most likely to continue with this trend, with this direction, with this momentum, with this clear path. And Victor does it perfect. And he gets in waiting for his signal right there to get into the trade. You'll understand where the market is likely to go. This will help you with profit targets, guys. Because you'll use the idea that a market that is moving fast is hard to stop, that when there's room to get to the next thing that could cause problems, all that momentum is likely to push it, and you'll just look at your chart and say, okay, I'm in this trade, that's where it's likely to go, what a great spot to get paid. And then you'll understand where the market is likely to stop. We call these termination conditions. Because they can terminate a trend, guys, because they can stop the market, they can end everything that was going on, and you'll be able to recognize them before the market ever gets to them. I teach the rules for both platforms every morning, guys. Everybody has the ability to simulate. You can also trade live. But if you really want to get to where you want to be, guys, let me see what you're doing. Post it in the room. Talk about what you see. Talk about why you did it. You'll get a private session with me, and we'll focus on the good stuff. We'll try to correct the bad stuff and move forward every day. And then just keep it simple. Both plans that I hand out in the room, neither of them has more than 3 rules for the trade. And both plans have a checklist. And guys, the checklists are nothing more than a description of the rules, if you will. Sorry, I need to change the icons over here. So in the room, I'm going to give you a KISS plan for both NinjaTrader and TradingView. I'm going to give you a spreadsheet for both NinjaTrader and TradingView. And guys, your plans are designed to optimize your chances of success. They're stepping stones for you. They're going to teach you to read your indicators. They're going to give you a very specific set of rules to put you in the market, because great entries create very manageable trades. I'm also going to give you spreadsheets. These are the basic rules for NinjaTrader, guys. These are client trades showing you what it looks like when the pattern is true. And you're going to get one for TradingView as well. And it has the looks for the two trades, ideas on management, when you shouldn't move forward anymore, guys. And all of this is really everything that you need to be successful with the software. The only thing that Nexgen doesn't provide is you wanting to study. We can't make you study. I can't make you post in the room. I can't make you ask questions. I can't make you annotate your charts, guys. You are my horses. I'm going to bring you to water. It's going to be up to you to get the work done, but I promise you, if you get the work done, you'll be surprised at how easy trading can be. So the high probability trend trade, we start on NinjaTrader every day, guys, just because we've been doing it the longest. Seems like a nice flow. The high probability trend trade is only 3 rules. When rules are met, you can identify an advantage, guys. And the recipe for a trade is the accumulation of 3 advantages put in play by 3 rules being true. That's a trade. A trade isn't my hope that the market goes up, my opinion that news should make it go down. A trade has nothing to do with needing to pay my bills. Guys, a trade is nothing more than a pattern that is repeatable. That pattern is described through 3 rules because those 3 rules create an edge, guys. And trading is about probabilities. And your edge doesn't guarantee a win, but you can prove that it wins more than it loses, guys. That's where the idea of the edge comes from. These 3 rules come to be on only 2 charts. We'll use a large chart and a small chart. Your large chart is slow. It will define direction, momentum, and areas. Your first 2 rules are met on that big slow time frame. Inside of the 1 bar that gives you your first 2 rules met, you'll see the entry. And the entry is buying or selling a pullback at an area inside of triggers. Using the smaller, faster chart allows you to refine the big picture, to minimize risk, to maximize profit potential. And guys, we're doing it because you gotta believe you're not in charge. You'll never be in charge. You're not the big fish in the little pond, guys. They don't even know you exist. The market doesn't care about your position or your needs or your wants or your hopes or your desires. There is a large crowd. This is your big chart. They win more than they lose. They will create trends. They will establish momentum. They'll react at areas. These guys will give you the good stuff to take advantage of the small crowd. This is your small chart that loves to fight. You're going to pinpoint where their fight is most likely to be lost. That is where the market is most likely to continue with the big crowd trend. And guys, that's going to become your entry for the highest probability trend trade. Indicators, knowing what you're working with, guys, this is just a roadmap. Both charts will have areas. They all have names. You don't have to know what creates them. Hell, I don't know what creates them. That's not true. I do. But divergence highs are magenta lines. And every time there's a loss of momentum, you're going to see a magenta line at a pivot. You'll see a cyan line at a low pivot. And every time you see this line, guys, I just want you to say, wow, the market's losing momentum. I want you to feel like that advantage of momentum is going away. You're going to see Fibonacci resistance, Fibonacci support, guys. This is the core of what we've done for 30 years. Fibonacci can stop a market. Fibonacci can create a bounce. It can entice a reversal, guys. And then yellow 1-to-1s are fibs in the moment. These print real time. Software does calculations. And guys, areas of resistance. If you ever hear me say price reaches resistance, we are talking about divergence highs, Fibonacci resistance, or yellow 1-to-1s in an uptrend. And if we say price reached support in a downtrend, we're talking about divergence lows, we're talking about blue Fibonacci support, we're talking about yellow 1-to-1s, guys. So price, when it's cruising, it either reaches resistance or it reaches support, and they all have names. Learn the names. Don't even worry about going beyond that. Both charts also have triggers. Small triggers, 2 solid lines. Large triggers, 2 dashed lines. Simplicity. They're moving averages. price tends to come back to moving averages. We're going to use them in three ways, and they will show up in every rule. First, we're going to use them to define momentum, to make sure that rule number one is met on the large chart. We're also going to use them to define termination conditions, making sure that rule number two is met on a large chart. And then we're also going to use the large triggers to define entries, guys, making sure that rule number three is true on a small chart. Triggers show up in everything that you do, and the only thing you need to know about them is that these are small and these are large. So now we're going to break down the rules, guys. Excuse me. Rule number one says that the 13-2 chart must have strong trigger lines. Strong trigger lines provide the advantage of momentum, guys. That's our first advantage. In order to identify strong trigger lines, you must be trading with the trend. You have to. You can't have them if you're not trading with the trend. So green is up, red is down. How easy is that? Green is up, red is down. This is futures. We don't care if the market goes up or down. We're going to make money both ways. In order to have strong triggers in an uptrend, small triggers are up above the large triggers. Large triggers are widening. And it's the space created between the two. It looks like scissors that are open. That is your strong trigger look. So the background is green. The small triggers are green. The large triggers are green. And there's space between them, guys. That's momentum. That's when the odds are favorable for the market to continue up. In a downtrend, smalls break below the large triggers. Large triggers are widening. There's a gap. And it doesn't matter if it's a big gap or a small gap. If there's a gap, the odds are favorable for the market to continue down. And odds favorable momentum, guys, you're going to see it a lot in this room, annotated as OFM on these ninja charts. Odds favorable momentum, it pushes a market. And odds favorable momentum is what we look for to break key Fibonacci areas. Odds favorable momentum is when you guys are pinpointing where these tails are most likely to form on that smaller, faster chart. You will actually be predicting where these tails are most likely to form and entering the market right at the tips. And momentum will even cover some of the mistakes that new users tend to make and provide more opportunity for the more experienced user. But momentum goes away. When the small triggers work their way inside of the large triggers, guys, you have weak triggers. Weak is the opposite of strong. That word should change your whole thought about looking for a trade, guys. Weak triggers, anything can happen up or down. When I have weak triggers, I don't know if the market's going to go up or down. I don't know if Fibonacci areas are more likely to hold or break. They're actually more likely to not break. But guys, momentum is the core. It starts us off for a reason. Weakness is a fantastic reason to sit on your hands and embrace the 90%. And guys, that is a one slide lesson. You either have strength or you don't. Smalls are inside of the large. Guys, this is crude oil. And does everybody see how it stopped on a dime right at an area of resistance with those weak triggers? But down here, look at this. With momentum, it broke through Fibonacci resistance. How's that for a real world example? We'll circle that tail and see if there was an opportunity. Guys, momentum pushes a market. Can you give me a why? I think everybody in here is probably old, but that's your look. And it's the same look every time. And if everything is flat and colors don't agree, guys, there's nothing to do. See how the market just gets stuck? Your trigger lines never give you rule number one met. There's no reason to look for a trade in that. But once you have momentum, we're looking for a clear path. We want to make sure there's no terminations. I want to have room to profit targets. And guys, on your large chart, a termination condition can be a horizontal line. It can be resistance or support. And this is where the large crowd makes decisions. This is where the large crowd enters, exits, fights, reverses. And if you remember that, this is where decisions are made by the people in charge, it helps a little bit with defining a termination condition. Because the first thing, and if you're a note taker, guys, this is great to write down. To define a termination condition, price reaches the area. Your dynamic Renko bars make it to an area of resistance. Your dynamic Renko bars make it to an area of support. And once price reaches the area, guys, I'm done with price. Don't care about price. My trigger lines will tell me everything that I need to know about that area. So if price reaches an area and my trigger lines remain below, both small and large, I've reached a termination condition, guys. This is an area that could stop the market. This is an area that could create an untradeable bounce. This is an area that could reverse the market, or this is an area that could break. And the reality is I never know what the reaction is going to be. They don't send out a memo. Like the sellers don't go, hey, guess what? When you get up here to 68.50, we're going to unload on the buyers and reverse the market. I don't know. So if I reach an area and no triggers break through, guys, my job is to do nothing. My job is to sit on my hands. My job is to not hope that something breaks, not wish that something breaks. How's that for an example? Not pray that the market goes up or down, but just sit on my hands. Guys, that is 1, 2, 3, 4, 5, 6, 7, 8. 8 termination conditions in one range, defining consolidation, keeping Nexgen users out of trouble. I love that. That's live market. Price reached Fibonacci resistance. That would be what we call an untradeable bounce. That would be a bounce that took you out of a position, guys. And all you have to do is every time price reaches an area, ask yourself, where are my triggers? Count your triggers. And if it's 0, termination, sit on your hands, relax. Guys, you'll be amazed. It'll either break or roll. I've never seen the market stop and shut down when it hits an area, ever. It's either going to break or roll. If it breaks, 2 of your triggers are going to get through first, guys. Your small triggers are going to make it above that area. And if you have momentum, if you have strong triggers, this is where more experienced users will look for opportunity for their medium probability trend trade, trying to trade that potential of the area to break. For you newer users, on the KISS plan that I gave you, on the simple plan, the plan that's designed to optimize your chances of success, it suggests that you wait for 3 trigger lines to break through and that you have momentum. And with 3 trigger lines through, notice that we went from red to yellow. This is where areas have a better potential for the breakout. It's still not a broken area. The path still isn't clear. You can never call it a high probability trend trade, but this will probably be most of your trades, guys, and you'll be able to lean on the advantage of momentum. You'll be able to lean on the advantage of defining your entry to help you take and manage this trade. But once 4 triggers get through the area, guys, whether it's above resistance or below support, this is what defines a clear path. And guys, your path will remain clear until you reach the next area. Your path remains clear until you hit the next area of resistance or until that market comes down and hits the next area of support. So what happens is, as the brand new user, guys, you're going to start to take these concepts. Sergio, they never will be. So Sergio asks, what about if the big chart triggers are not the same as the small chart? So Sergio, they're 2 very different time frames. So let's pull them up. There is the big chart, and this is a 13.2, and there is a small chart, and this is a 5.1. And inside, so this 1 bar, this price on the large chart, your trigger lines are reacting to that price on the large chart. Your momentum is defined from the movement on the large chart. Your 1-to-1s are defined from the movement on the large chart. Your divergences are defined from the movement on the large chart. See how I put a box around 1 bar on the large chart? This is what happens inside of that 1 bar, and we're about to get into entries, which is pretty cool. So you'll see divergence on the small chart. Has nothing to do with the large chart. You'll see the small triggers roll against the large chart. Has nothing to do with the large chart. And this is why we let the large chart, the big chart, the slow chart, this is why we allow it to define our momentum, that big picture. Why we allow the large chart to define areas that are broken or have the potential to broke. And we're just using this faster chart for entries. So your 1-to-1s won't line up. Your trigger lines won't line up. your divergences won't line up. But check it out. One thing we did, and let me move the box. If I put a box around these synthetic triggers, they are the large triggers from the large chart. They've been superimposed over here, and we will use the large triggers from both charts to increase accuracy. Does that help a little bit? Does that answer your question? They're different time frames, so they're different moving averages. Good question. I like that question. Guys, there will be times where areas are stacked and you can't seem to get a clear path. There will be times where you're frustrated that you can't seem to get 4 triggers above an area or even 3. And guys, that's okay. That's 90% of your day. 90% of your day is really being patient. 90% of your day is waiting for the best look, is waiting for rules to be met. Because this was the most frustrating 4 hours of your life where you can't get rules met. But what's the other side of the coin on that, guys? I couldn't find rules for a trade, but I also, because I'm following a plan, because I'm waiting for those advantages, I didn't give away a penny of my money. Not one penny during this time of consolidation. Did not give away one penny when the market couldn't break out of areas, when it couldn't provide me momentum. Because guys, my rules provide an edge, and all of my patience was rewarded with 3 triggers through, all the momentum, and a pullback right to that area inside of triggers. And we're going to talk about defining that entry now. Because when the large chart has direction defined, and you know whether it's going up or down, when it has the advantage of momentum and it's going to be difficult to stop, when there's absolutely nothing in the way, no places where decisions are most likely to be made, guys, this is the best of the best. And if you focus on understanding momentum and path, it opens the door for the rest of the trades. It opens the door for momentum style trades, for those jump the fudge in trades that you guys take. And I think it's hilarious that it has adopted the moniker jump the fudge in. Because with momentum and nothing in the way, you guys are doing great things without entry rules being met. And Ron C., thank you for creating the chili dog trade. But your entries, this is for you new users. And guys, this entry isn't only designed to get you in the market. It's going to teach you about stop placement. It's going to teach you and remind you that advantages come from a large chart. So everything that you learn on this one trade pushes you forward and makes you a better trader. But your entry, I love the language. And this is one of those times, again, where I say, if you're a note taker, write down this phrase. And I'll type it in the chat box too, guys. Your entry is so specific that you will use a limit order, which means that you'll wait for the market, and you will buy or sell a pullback. And that pullback is the fight from the small crowd. It's a tiny retracement counter to the underlying trend, and you will do it at an area. Fibs, mid bands, yellow 1-to-1s, because on a small chart they can create a bounce the same way they did on the large chart. And the most important part, guys, and I always capitalize this when I annotate my charts, inside of triggers, inside of those large triggers on the small chart. And I dropped it in the chat box there for you. I'm going to use a limit order to buy or sell a pullback at areas inside of triggers. I'm going to wait for the market to come back to me right at an area inside of triggers, guys. And this is a pattern. This is, sure as the day is long, a pattern that repeats itself on every market. This is a pattern that repeats itself daily. This look, that pullback to the area inside of triggers, this is your entry for the highest probability trend trade, guys. And there's a way to make it even better. I know you're like, Mark, how could you possibly make it better? This is so amazing. Insist on favorable large triggers, guys. When your large and your synthetic are overlapping, one on top of each other, 2 snakes riding piggyback. And this goes back to the picture that we just did for Sergio. Your large chart has large triggers, and it will be used to define momentum and help you understand when areas are broken. And your small chart has large triggers, and these will help define momentum. And guys, your large and your synthetic, this is how you will define where that retracement is most likely to go. And you can see that they don't always line up. But when they do, when they are one on top of each other, holy smokes, guys, least amount of risk, highest level of accuracy. So if I buy or sell a pullback to an area inside of favorable large triggers, I know exactly where the market is most likely to retrace, and it's not a lot of space. And if I have an area inside of that retracement zone, a fib, a midband, a yellow 1-to-1, I know precisely where the market is most likely to bounce. And guys, it's very specific with this look. This look minimizes risk. This look maximizes profit potential, guys. And again, all it is a pattern. So we're going to describe the entry pattern on the spreadsheet that I gave you. If you go to the client trades, it describes it bar by bar for you, what you're looking for, exactly where you're looking for it. And if you click on these 500 pictures, guys, you're going to see the same darn entry about 498 times. It starts with a reversal bar on the small chart. When the large chart is up, when the large chart has momentum, when the large chart has a clear path, and I can't stress, let the rules dictate, let the large chart tell you to look for an entry, you're actually going to wait for a reversal bar on the small chart. And this is counterintuitive. Mark, what do you mean? I'm going to buy a market on the way down. That's ridiculous. The trend has changed. Guys, the trend has not changed. And where's that picture again? Let's go back to the live market one more time. My large chart remains up. And my large chart still has momentum. And my large chart still has the potential to break, guys. This is nothing more than just a moment inside of that one bar. So don't get freaked out about a market going down on a small chart. Let the large chart define that direction. Reversal bar begins the pullback. The reversal bar is not your entry. The reversal bar is actually a loss of momentum. It gets you to the weak side of the triggers, guys. And if you couldn't hold your water and you jumped in before that reversal bar, what a great exit condition as you wait for it to pull back. So reversal bar begins the pullback. You'll know exactly where the pullback is most likely to go using those large and synthetic triggers. It defines the retracement zone. But triggers aren't bouncy. Triggers have very little in common with brick walls. But fibs, midbands, yellow 1-to-1s, areas inside of that retracement zone, guys, that's where the magic happens. And sometimes you'll have what I call the window of opportunity, because it really paints a picture, right? Sometimes you'll have multiple areas inside of triggers, and you're going to be forced to make the decision. Do I enter at the top? Do I enter at the bottom? Guys, when your large chart rules are met, the rules say activate your limit order above the highest point of support inside of those triggers. Don't miss that trade, because the large chart is a freight train with nothing in the way. And it could go lower, and that's okay. Your advantage is still in play, and it could even go all the way down to the bottom of those triggers. And that's okay. You're still right where the market is most likely to retrace. You still have areas. But if you get beyond those triggers, guys, if there's no areas inside and they're only below those triggers, this is where the market shouldn't go if this trend trade is going to be part of that potential 70 to 80%. Guys, this is the wrong side of the triggers. You're going to teach yourself to ignore areas on the wrong side of the triggers, because once you blow through all of the good stuff, rule number 3 is not in play anymore, guys. You no longer have an edge. You no longer have an advantage. You're no longer where the market is most likely to continue. This is where the market should not go. And in a short trade, it's no different. Stand on your head if it's uncomfortable to see a market going down. Guys, with momentum, with path, you're going to wait for a reversal bar. It signals the beginning of the pullback. It's not your entry, guys. This is the start of the fight. And once the fight starts, you can define right where the fight's most likely to go, where those up bars are most likely to go up. From the bottom of the triggers to the top of the triggers, those large triggers. This is your retracement zone. Entries don't come from a retracement zone. Entries come from an area inside of the retracement zone, from a fib, from a midband, from a yellow 1-to-1. Guys, this is your brick wall. Price is your tennis ball. This is where the market is most likely to bounce, where it's most likely to continue with the large chart advantages. Any lines beyond those trigger lines, the advantage is gone. Any lines beyond that retracement zone, the advantage is gone. Any areas beyond those triggers, it's not a part of the entry. I don't know if, when, or where the market's going to go down, guys. Your job is to activate a limit order a tick or two below the lowest point of resistance. Don't stumble over a couple pennies trying to save dollars, guys. And understand that your advantage is in play all the way to the top of those triggers. You're still in the good. You still have an edge until you get to the top of those triggers. And when you blow through, if they blow through, and they will from time to time, you find yourself where the market should not go. And your great entry, defining where the market is most likely to continue, has very conveniently defined where the market should not go, where your advantage is no longer in play, guys. And initial stops, per the KISS plan, will be placed where the market should not go, generally 4 to 5 ticks above or below those triggers. And you're going to say to yourself, and this is hard to do, this takes a level of trust. You're going to say to yourself, because my large chart has the advantage of momentum through strong trigger lines, because my large chart is not trading into areas and my path is clear, because my small chart pinpointed with unbelievable, amazing accuracy where that underlying trend is most likely to continue, if the small crowd can get 4 to 5 ticks beyond those triggers, I accept that loss. I am okay with that loss. It is a small loss. Guys, that loss is a cost of doing business. And anything that wins 70 to 80% of the time is obligated by math to lose 20 to 30% of the time. And one of the biggest mind shifts that new traders have to have is that losses are not failure all the times. Losses are opportunities to learn. Sometimes great trades fail, guys. Sometimes the greatest trades, the best setups, they fail. It's okay. Because if you take the same trade setup 10 times and the rules are met 10 times, you're likely to lose 2 or 3. You're likely to lose 7 or 8. So guys, don't let your emotions bypass probabilities. Don't let your emotions tell you, this one lost, I must have done something wrong. Go back to the idea every time you take a trade that there is a recipe. And the recipe begins with momentum. And it requires either a clear path or that 3 trigger potential to break. And when the large chart says go, let's take a picture here because this goes back to the little thing that we talked about with Sergio as well. Snagit is being lazy today. There we go. When the rules are met on the large chart, guys, the market is trading all the way up here at 97.05. The market is, their small chart is all the way up here at 97.05. And a lot of you guys are panicking and you're like, I need to get in. I have to get in. I want to get in. It's going without me. What am I going to do? And guys, from all the way up here, you're also going to say, there's just not room to that termination condition. Stop it, snag it. You're going to say there's only 8 ticks. Why would I take a trade with only 8 ticks of profit potential? And guys, this is all part of the trust building process. You've got to remember that your entry isn't coming from 97.05. Your entry is coming from all the way down here at the area inside of triggers. Your distance to profit from your great entry goes from 8 ticks to about 32 ticks, guys. And this is the pattern complete. It begins with momentum. It is followed with path. And once you learn those two, guys, a lot of you will take that trade, make a little money before the termination condition. And that tail, we don't trade this tail, guys. That tail is your pullback to an area inside of triggers. This is how you can study it. Things that new users do. But Mark, there's a termination condition. Well, terminations are defined on the large chart. But Mark, the small triggers have turned against me. I don't have momentum. But my friends, momentum is defined on the large chart. And when you remember and when you accept that the large chart is the reason that we look for an entry, and the small chart is where that entry comes from. Remember when I told you you'd be able to pinpoint right where the tail is most likely to form? Guys, that's your pattern. And it's exactly what we talked about for the last 40 minutes. It is momentum. It is 3 triggers through. It's a pullback to the area right at those triggers, guys. And it never gets 4 or 5 ticks below those triggers. You can study this by scrolling back, looking for tails when the rules are met, saying to yourself, I do have momentum. It's only 2 triggers through. But watch how you can call your shots, guys. If you were looking for where the market was most likely to continue, you could say, with no uncertainty, if I get a reversal bar, it's most likely to go somewhere from the bottom of these triggers to the top of these triggers. If I get a reversal bar, it's most likely to bounce from these areas somewhere within that retracement zone. And I know before the trade is ever taken that if I really want to take this trade, my stop goes where the market shouldn't. And this is where you're going to begin to grow and say, well, with only 2 triggers through, with an entry at 14, I don't want to put $250 per contract on a trade that only has the potential to break, and it's not even my best potential look. And that's where you guys will have the ability to use the very basic concepts. You guys will be able to go back to every time you're looking for a trade. Do I have momentum? Is my path clear? Can I define my entry? And if it's yes to all 3, you'll say to yourself out loud, just high five yourself, this is the highest probability trend trade ever. This is the best of the best. This is exactly what I hope for every day. I can't wait to take this trade. And you'll grow to a point to where you say, you know what? I don't have the best momentum. It's not the best momentum, but I still have a clear path and I can define an entry and manage my risk. I choose to take a medium probability trade. I will manage it a little more assertively. I'll get to break even just a little bit faster. And you'll also be able to say, because you're in control, I'm missing 2/3 of the good stuff. I choose not to trade. And of all the lessons that we've been given this morning, this will be the hardest one for you to commit to doing nothing when there's nothing to do, to sitting on your hands when the advantages aren't present. But guys, this very simple recipe gets you focused not on a trade, but on the advantages that create a trade. And you will carry these advantages on to everything you do beyond this very basic trade. You are in control of the entry. Nobody can make you enter. Nobody can force you to jump in. Nobody is holding a knife to your neck and saying, take this low probability trade. And if they are, blink twice. I'll send help, guys. But when you know what's working for you, momentum, path, and entry, when you know what's working against you, the loss of momentum, not a clear path, it's also going to help you manage. You're going to know whether you should manage assertively, take quick profits, get to a 0 loss level. And you will be in control of the trading, guys, and you will never relinquish your control because you are the powerhouse. And price reached a termination condition, an area of support. None of the triggers broke. Guys, with all that momentum, your path isn't clear. Rule number 2 is not met. It would be okay for you to choose not to take a trade. Here's the S&P. 2 triggers didn't break. 2 triggers didn't break. No triggers didn't break. No triggers didn't break. We're letting them work it out. We're letting them figure it out, guys. I've got momentum to the upside, but I've got nowhere to go. And I'm just in a little bit of a holding pattern. Just in a sit still moment. And look at the reaction right off of resistance, live, in your face. Pretty cool, right? You knew about it. You knew where it was. All right, that's Ninja Trader. Are there any questions? Small class today. Makes me sad. Bring your friends, guys. Let's go to TradingView. Your video is stuck. Yeah, it's because you're over the pond. You and your pawns. Here you go, Miss Jen. TradingView, guys. TradingView, is that better? TradingView is not Ninja Trader. TradingView shares some similarities. Guys, if it ever gets stuck, just let me know. I'll reload. If you ever can't hear me, let me know. We'll find a fix. TradingView, guys, is going to use one-to-ones. I think they're 10 times more powerful on TradingView because of the bar structure. TradingView is going to have divergence highs and divergence lows. That's all familiar. TradingView is going to have a mid-band. We've seen it. We know it. The one thing TradingView doesn't have, guys, is Fibonacci. We've got programmers. We got 1,000 monkeys at 1,000 typewriters trying to build the program to get it. But until they do, there is a company called Chart Prime, guys, and it's $50 a month. I'm going to tell you right now, Chart Prime provides supply and demand zones. If you don't want to spend the $50, that's totally cool. That's your right. Let me know. I'll introduce you to some free options that aren't quite as good, but they'll at least do in a pinch. But we're going to treat these supply and demand zones like we do Fibonacci. They're going to define turning points, guys. They're going to define areas that could stop the market. They're going to help define entries. And the bar structure is different. With all the similarities and indicators, the bar structure is a little different, guys. Your large chart is a 15-minute chart. I can't stress how slow a 15-minute chart is. You could see 100 points worth of movement inside of one 15-minute bar. So we're going to let the big chart define direction, momentum, key targets, and terminations. That should sound familiar. Your small chart is a 1-minute chart. And guys, 1 minute is a long time. Tell people, hold your breath for a minute. You'll be surprised at how long that minute feels. It's going to define the immediate strength of the market. It's going to define your entry points, guys. And it's no different than NinjaTrader. You're not in control. You never will be in control. The plan that I give you is designed to keep you in the good graces of the large crowd, to keep you going the direction they're going, to teach you to recognize their momentum, and to keep you aware of the areas where they make decisions. Small chart, we need the fighters, guys. Same thing. We're going to define entry on the small chart. So if you're one of my TradingView people, especially if you're one of my TradingView people passing evaluations, taking evaluations with Nexgen Pro Trader funding, I really want you to pay attention because I'm seeing a lot of people pass these evaluations using some very simple concepts, guys. So to read your large chart's going to define direction, and it doesn't even have large triggers on it. It's too slow. It doesn't have background colors. It's misleading. Guys, you're going to use the small triggers. They are either down or they are up. Direction defined. Pretty easy, right? The market's going down. The market's going up. In this case, the market is going up. I'm only looking for rules to be met for high probability, or for trend trades long, for momentum trades long, guys. So once I define direction, let me know if that's a challenge. We'll get you some extra resources. I have to ask, where is the most current price in relationship to those triggers? And there are 3 options, and this is just a blown up picture of that right there. I'm either left of the triggers, inside of the triggers, or right of the triggers. Left side, inside, right side. The left side of the triggers is the best of the best. The left side of the triggers is the strong side of the triggers. The left side of the triggers is where momentum trades happen. Guys, the left side of the triggers is where 1-minute areas are most likely to break. The left side of the triggers is damn near perfection, guys. And when you're left of the triggers, that's where the bigger moves typically come from. If you are to the right side of the triggers, guys, this is the weak side. Again, I'm using language to paint a picture for you. If I'm on the weak side of the triggers, this is where 1-minute areas are most likely to stop a market. This is where I never want to fight the immediate momentum, guys. The weak side of the triggers, this is where reversals come from on that big strong chart. So if I'm left side, giddy up. If I'm right side, get ready to manage. Take quick profits. Get to 0 loss levels. This is going to dictate your management plan. And if I'm inside, guys, this is transition. This is not quite strong, but we're not weak. This is where my awareness goes up. This is where maybe partial contracts come off at trouble. This is where getting to 0 loss levels pays dividends. And I'll let the 1-minute chart really lead the way on the management of these. So if it's up, you know to go up with it. When you define where the current price is trading in regards, because guys, look at this. Current price is not the close of a bar. You can go from weak to transition to strong inside of one bar. So the immediate lets you know how to manage. And then the most important question, is there room to targets? And I want to do this real quick. Everybody's familiar with flow charts, right? Is there room to targets? If it's no, stop looking. How easy is that? If there's no room to make money, don't go to the 1 minute chart. The plan says don't go to the 1 minute chart. If it's yes, go find your entry. And this is the only thing on the large chart that will determine whether or not you go look for an entry. Up and down doesn't determine whether you look for an entry. Strong, transition, or weak doesn't even determine whether you look for an entry. Room to targets will set you up to find your entry. And there's two. There's the first one. This is the momentum style entry, guys. And the momentum style entry is maybe 10% of your trades, possibly 15%. This is not the most common entry. The momentum style entry has three things on the checklist. The first thing is that the 15-minute is not trading into anything, that you have room to targets. The second thing is that 15-minute is on the strong side of the triggers, guys. That's the best momentum. And it's comical how often I say, and even more comical how many times I had to hear, you can't take a momentum trade without momentum. You can't enter the market, call it a momentum trade if you don't have the strong side of the triggers. And even more importantly, if your 1 minute triggers are not strong. And this is the same lesson, the exact same lesson from NinjaTrader, guys. In order to have strong trigger lines on your small chart, there's only one look. Let me find the picture. There's only one time. Get over there. In a downtrend, if your smalls are below the large, if there's space, you have strong triggers. In an uptrend, if the smalls are above the large, if you have space, you have strong triggers. And if it's not this look, you shouldn't even look for an entry. But if you have nothing in the way, if you're on the strong side, if the 1 minute is strong, guys, this is the only trade where we'll use a limit order. Now on NinjaTrader, every trade was a limit order. We are going to use a limit order to buy or sell just a little snapback. It's fast. Right at an HVA or an area. The only time on TradingView your rules say to use a limit order. So the smalls are up. The market is trading on the strong side of the smalls. And there's nothing in the way. I've got room to trouble. On your small chart, guys, this zone, as everything is going up, will ultimately be your entry. But first, you've got to let that zone, you got to let price bars get above that zone. You've got to let it get beyond that zone. Not peek in its head, guys, but literally get a bar where there's a gap between price and that zone. And as long as you have strong triggers, you're going to activate a limit order right at the top of that zone, right at the top of an HVA, right at the top of one-to-ones. And you're going to say to yourself, I sure hope that momentum pushes. And if they snap back and get you, risk is tiny, right below. And this is hoping 100% that momentum carries that market off to the next level of trouble. And it's just a momentum trade, and it's a quick trade, and it's a either wins or fails trade, and you'll know pretty rapidly when the market is down, when it's on the strong side. Guys, when you have strong triggers and you're selling that little snapback, it's a low risk trade. It's relying on momentum. This is about 10% of your trades. The most common trade comes from when this trade fails or when I just didn't have the momentum, guys. And it's a trend trade. And the trend trade starts with not trading into areas on the 15-minute chart. The only reason I'm looking for entry is because I've got room to make money. The trend trade tells you that the 1 minute shouldn't be trading directly into an area. Shouldn't be trading directly into a zone. Shouldn't be trading directly into one-to-ones. Not into a mid-band, not a VWAP. And remember, guys, that the plan from the KISS plan is designed to optimize your chances of success. It's designed to give you the highest chance of success, to give you the most confidence from that success. What I'm telling you is not the only way to enter the market. What I'm telling you is the highest probability way to enter the market. If the 15-minute and the 1 minute are not trading into anything, you're going to buy or sell a close on the correct side of the small triggers at the 1 minute mid bands or areas. Which means that with the smalls up, from the transition, right, sets me up, lets me know how to manage, and I have room to targets. The market's going to be up here once again, and the moment my small triggers turn against me, the moment this happens, I'm going to say out loud, I'm going to say, because the small triggers rolled down, my rules say to wait for a pullback to an area, and don't just enter at the area, guys. Wait for an up bar that closes on the correct side of the triggers. Wait for an up bar that closes on the weak side of those small triggers against me. Guys, you will lose almost every fight against those triggers. So letting price finish on the correct side, on the weak side, that's where the trend trade starts. Not a close on the correct side of the triggers from space. Let the market reach something bouncy. Let it get to an area, guys. This will increase the likelihood of success. Your trend trade will look the same every time. There will be a pullback. There will be an up bar. It will finish on the correct side. That's the entry for the trend trade. When it's down, when it's strong side, when there's room. You're thinking momentum trade, but then the triggers turn against you. And you have to say to yourself, dag nabbit, let me circle an area off in the distance because the triggers rolled. Let me wait for a down bar on the correct side of the triggers. Let me go from that point with the underlying trend, with the momentum, with the clear path. Guys, your trend trade shorts will look the same every time. I would wager to say 90% of your trades will be trend trades. Whew, look at that. Right from a termination. 90% of your trades will probably be trend trades, guys. And you'll get so good at reading your indicators that you will say in a matter of seconds, my triggers are down. I'm on the weak side of triggers. I do have room to go short, but because my small triggers rolled, I'm not entering at a mid-band or one-to-ones or a zone or another zone or at one-to-ones. I'm forcing the market to give me a down bar on the correct side of these small triggers. I'm forcing the market to tell me that I have room. And guys, if it closes on the wrong side of the triggers here, on the weak side, you're directly into one-to-ones. You're directly into a zone. Guys, this is 90% of your day. But your chart reads will literally go that fast. My triggers are down. I'm on the strong side of the triggers. I have absolutely nowhere to go because that VWAP is sitting there. And look at your small chart. VWAP, bounce. VWAP, bounce. Zone, bounce. You don't have to hope an area breaks. You don't have to wish that your path was clear. You can use your trigger lines to say price reached resistance. None of the triggers broke. I'm going to sit on my hands for a second and you can see the reaction from the small crowd right there. And I have momentum and I have the potential to break, and sure enough it pulled right back to a mid-band inside of triggers and it went right back down to that loss of momentum. And guys, when you get multiple losses of momentum, these areas become less likely to break. So that's my first hour. Are there any questions about high probability trend trades? Are there any questions about defining momentum, termination conditions, pinpointing your amazing entries, guys? It's a matter of repetition at this point. Every morning, I give you everything that you need to be successful. Every morning, I give you rules. Every morning, I hand you a plan. Every morning, I give you spreadsheets that show exactly what it looks like to have your patterns met. Now it's up to you, guys. Nexgen. Nexgen provides analysis, rules, coaching. You will be responsible for becoming profitable. I'm here to help. Nexgen's here to help. You'll get more help than you could ever hope for. But now you have to do your part, guys. I was talking to a buddy of mine yesterday, and on the spreadsheets for Ninja Trader, guys, it shows you each rule broken down. And the idea isn't that you stare at the picture, guys. The idea is that you take pictures yourself, 25 pictures each. Strong triggers, weak triggers, clear path, termination. Talk about why they're met. If you take the time, and let's do a real world example, and then I'm going to take a little break. If you take the time, where's my chart? There we go. To take a picture, and you said, with an arrow, watch this. That's huge. Smalls inside large, weak triggers, no momentum, rule 1 not met. Is there anyone in the room that believes they could type that out with an arrow looking at that picture and mistake weak triggers for strong triggers, where you would do the exact same thing? Whoops. Smalls below large, colors match, space, odds favorable momentum, rule 1 met, strong. Type it all out. Everything that gets you excited about this look, guys. And if you go through this process, and I promise you, if you go through this process, if you don't rely on the work that I've done for you, but rather do your own work and add 25 to each of these sections, you're not going to make mistakes on your chart reads, guys. You're not going to accidentally say, ooh, I thought it was strong when it was actually weak. And you're not going to say, I thought it was clear when it was really a termination. And guys, if you go through that process, you'll get to where you want to be faster. Now, to a lot of you, you're like, well, damn it, Mark, that sounds like work. And I just want the money. I don't want the work. I just want the results. I don't want the work. And it's crazy how common that is among traders, guys. Your success will be a byproduct of the effort that you put into learning to read your indicators. There's no doubt in my mind. The rest of class is going to be you telling me how you read your indicators. Mark, this is how I saw momentum. This is my thought on the termination condition. This is where I entered and why. Did I do it correctly, Mark? Did I take the right trade? Did I follow the rules? Did I read my indicators accurately? And every time you post in the room, you get a private session. But guys, I can only give you the best feedback if you tell me why you did what you did. If you tell me how you read your indicators. And the cool thing is when you guys take an amazing trade, your annotations that so many of you avoid, your annotations have literally written a recipe for success, for making it repeatable, for making it testable, for making sure that you have the advantages that you need. So when you post in my room, talk about which direction your small triggers were going. Tell me which side of the triggers they were on. Tell me that you had room. Did you take a momentum trade? Did you take a trend trade, right? Did you have what you need? And guys, if you do that, you're going to get to where you want to be sooner than later. If you take the time, 90% of trading is doing nothing. Guys, take advantage of that 90%. Oh, look, only 2 triggers through. I don't have a trade. Let me go take pictures of termination conditions. Let me take pictures of momentum breaking areas. Let me take pictures of these tails. Let me take pictures where the market stops. Let me take pictures where the momentum was strong. And guys, if you do that, life gets pretty good for you. Not going to lie. But it's up to you. You're my horses. This is your water. I sure hope you drink. But I'm going to take 5 minutes. When I come back, we're going to click on every chart posted. Everybody gets a private session. And then we're just going to watch the live market, guys. If the rules are met per the KISS plans that I dropped in the room, we'll pull the trigger. We did it yesterday. We took an awesome $300 winner together. If the rules are not met, guys, I'm not going to hope. I'm not going to try to show off and make something happen without advantages. The only way I will ever pull the trigger for educational purposes is if the rules are met. If I have an edge. If those advantages are there. And guys, that's when we're going to do it. So, I'm gonna leave you. I'll leave you with crude oil. We'll see what it does. Back in 5, guys. Go stretch your legs. Alright, that took a little longer. Turns out my wife likes me. Who knows? She wanted to talk this morning. I don't know how that happened. Alright, so I'm going to go up and I'm going to start clicking on the pictures that are posted. And remember, guys, I'm not the trade police. My job is to look at what you wrote. My job is to look at the advantages that you talked about. My job is to talk about your entries, to talk about your exits, to give you anything in my power to help you become better with the software, to help you become a more efficient chart reader, so that you can make good decisions. I don't want to be the boss of anybody. Jen, it is your show today. There are a lot of Jen pictures in here. All right. Victor, we already saw Victor's and we talked about it. So we're going to start. This is Pete. I like that you're busy. Keep you out of trouble. And guys, remember, I'm going to read what you guys wrote. Everybody is in a different place, right? Everybody is at a different level. Everybody reads a little differently. So don't put your efforts into trying to prove somebody wrong. Don't be the trade police. Realize that what's right for one person may not be right for someone else. Before we start, Paul writes, I have observed that when a trend trade closes on the correct side of the small triggers and the 15-minute is on your side, set your stop where the market should not go. Rules and hang on, because most of the time they win. Trusting in this world of illusion and deceit is difficult, but you're getting there. And Paul, I agree with you 100%. I agree with you 100% that it is difficult to have that trust. But that trust comes through repetition, guys. And let me expand on that real quick. Sorry, before we go. I built a workspace yesterday. And I do a lot of stuff outside of the room, guys. And this is, we'll make it the 1 minute. And I want you to see something. So this is a 1 minute chart. And I'm going to get rid of zones, and I'm going to get rid of that, and I'm going to get rid of trend bands, and I'm going to get rid of one-to-ones, and I'm going to get rid of divergence potential, guys. And I want you to see something pretty cool. The market goes down until it closes on the correct side of the triggers, and then it goes up. And that was a little flat there, but let's give it some movement. And the market continues up, and it tries to close, right? Maybe rules weren't met, and when it does close, down it goes, and then it kind of goes, and then it closes below, and it goes, and it closes above. And guys, what you'll notice if you do this is that when these triggers are flat and there's nothing going on, that's consolidation. And when you get to the right side from consolidation, off it goes. And when you get to the right side, down it goes. When you get to the right side, that's where the beginning goes up. And guys, one of the things you can do, I'm going to close that without saving. And I even put this in the 60-second series under playlists. And it was just, whoops, wrong one. Open the playlist. And it's called Trend Trade Logic. And it goes through the idea that it's that close on the correct side where the winners typically start. And Paul, what you've pointed out is one of the lessons that's going to make it easier to hold trades. One of the lessons that's going to make it easier to not panic. Caleb, you don't know your charts have a delay, but the market goes up but still shows a loss. So this D right here, Caleb, you are working on delayed data, which means you've got about a 15-second hitch between what's happening in front of you and what's actually happened. Have you purchased data from TradingView to get you real time? Okay. You may want to shut down, reopen. Make sure that you are on an account that has that delayed data or has it fixed. Typically, it goes through the broker. Um, but having the data should fix it. I would try to reload it and see if that helps. And if you can't get the answer that you need, Caleb, do me a favor. Put in a ticket with Jason in tech, and let him help out. I know that he knows the fix for that, and I can't think of it off the top of my head. Guys, if you ever have a challenge with your software, reach out to tech. Jason's amazing. Chris is there. Caleb's there. Caleb, you are Caleb. Cav is there. Guys, there's so many people just waiting to help you if you have a challenge. And I'm sorry I'm not more helpful, Caleb, but it is the delayed data that's giving you grief. And that's what needs to be fixed to get you real time. All right, so nice large chart. Triggers up, price on the strong side, above the zone, above the HVA. And Pete just jumps in. Pete just says, you know what? I've got strong triggers. I'm just going to jump in, and I'm going to use my Ninja Trader for an exit. And Pete, it's a great momentum style trade. Nicely done. Momentum and path, guys. Momentum and path. Triggers are down, strong side, room to trouble, and then Jen, you don't get in directly into trouble. Jen gets in directly below trouble and rides it to the next trouble. And Jen starts with direction, followed by where I am in relationship to the triggers, and you don't trade directly into the zone. You literally let it break. You avoid the little dance, and it's awesome. Another great trade, guys. Good job. Then reason I took this trade, termination condition, smalls below the large, and Jen, you took the HVA, the white bar breakout, because of the termination, and what a beautiful trade. Nicely done. And guys, this is counter trend. This trade, her going short when this says up, is a direct reflection of her understanding that long trades are the wrong direction. And she's saying, if I can't go long and I recognize this white bar pattern, I'm going to go short and I'm going to take it to the first sign of trouble, or I'm going to let it run a little bit, and you get all the way out at 69. Beautiful. Great job. Great job, Jen. And then the triggers roll up. She's on the weak side. She's coming from a termination. So, Jen, you said momentum trade. Now, let me rephrase that. The KISS plan says no momentum trades if you're not on the strong side. That's what the KISS plan says. Jen, what you're doing is you're taking that small chart momentum. You're taking that immediate strength and you're saying, you know what? These are up. There's nothing in the way with this market pushing this hard. Let's see if they get back up to the zone. And then what I love is your analysis. Guys, if you go back to every trade you take and think about it without the threat of win or loss, without the adrenaline, without the anxiety, Jen says, oh, wait a minute, $60, that was greedy. With the 15-minute on the weak side, I should have taken all my profits right at that zone. Oh. Guys, give me a Y if you can hear me, please. Oh, and now I'm back. So Jen, and everybody in the room, and guys, what's going to happen a lot, and some of you maybe don't like this as much, is if you post a chart with a lesson for the group on it, guys, I'm gonna use your chart as a lesson for the group. So I'm not necessarily talking to Jen. I'm talking to everybody. When you're on the weak side of the triggers, one, if you're following the KISS plan, you can't take a momentum trade, but that's okay. Jen's in a different place. She's recognizing stuff. But if you're on the weak side, the one thing that I really try to stress every time is that these 1 minute areas are most likely to create bounces, to not break, to stop the market. And Jen used it after the fact. She said, from 74, probably should have taken both off. Shouldn't have given up all that money because I'm on the weak side of the triggers. And Jen, it's great after the fact recognition. And because Jen types out, here's where my analysis was flawed, here's how I fix it, Jen, you're more likely to take profits right at the zone from the weak side instead of hoping that it breaks. Good stuff. Good morning, Miss Cindy. Nice to see you. But Jen, you've got to make these mistakes, right? Be thankful for the things that seem to go wrong. Be thankful for the challenges, guys. What they're doing is they're creating lessons for you. They're creating opportunities for you. Jen says the zone is here. Yeah, it is. Strong side, room below from 46. And then the market begins to pull up. And Jen, do you notice how you got to close below, but it's not really from an area? And by the time it closed below, it had nowhere to go. And Jen says, not my money. Do what you want, NASDAQ. I'm not jumping in. I don't have what I need. I don't feel comfortable with no room. I don't feel comfortable, hopefully, not from an area. And what happened? They did go back up and find the area, but they never gave room. And Jen, great job recognizing consolidation. Great job recognizing that you got back in the zone. Great job recognizing that it's okay to do nothing. Because when there is no clear advantage, guys, there's just no reason. And it takes a while to get to that point. Jen, you have turned a corner and you are running away from all of us with your brilliance. And I love this. Congratulations, Pete. Guys, thrilled to inform you that your trading account evaluation has been verified and approved. Your hard work, discipline, trading skills have paid off. You have passed the evaluation and you are ready for the next stage. Congratulations, Pete. Guys, I get giddy when I see you guys do this. And again, I don't give trading advice, but I'm going to tell you guys one of the things that I see more often than I don't. I watch people pass evaluations being conservative, following rules, taking profits. And the moment the threat of real money comes into play, they change their plan. You're having a hard time passing the evaluation in 10 trades. Caleb, why do you have to pass it in 10 trades? Lenny, that was Nexgen Pro Trader funding. He passed Pro Trader funding. Caleb, why on earth do you need 10 trades to pass? Why are you trading 10 contracts? If you're not passing with 10 contracts, it's not the contracts, Caleb. What are you doing? What are you doing that's counterproductive? What are you doing that's not creating? It's way over leveraged. I would have trouble on 10 contracts because all it takes is one loser to blow out an account. And again, I don't give trading advice, but Caleb, very few people are trading over leveraged and doing well. That's one of the biggest killers of accounts. But I'm going to go one step further. And Caleb, please take this with the love that it is delivered with. You're not passing evaluations, but you have access to someone Monday through Friday, 3 hours every day, that will look at what you're doing, that'll talk about what you're doing, that'll give you help with everything you're doing. And guys, my sole purpose is for you guys to kick the ever-loving crap out of these evaluations. Go make some money. And what are you doing, right? Guys, if you're not passing, come to my room. I'll help you pass. I'll give you rules. Here we go. I'll teach you. I'll give you checklists. So Caleb, very few people that don't have a plan, 10 contracts isn't going to fix it. If you don't know why you're entering, guys, if you don't have reasons for exit, you're just hoping. And my father-in-law always said, hope in one hand, shit in the other. Tell me which one fills up first. My father-in-law was a brilliant man. Jen, this is not a breakout bar, my dear. This white bar is a breakout bar. This is just a big bar. Does that make sense? That's your breakout bar. But that's a breakout bar, and that's a breakout bar, and that's a breakout bar, and so are both of these. Breakout bar is nothing special if the rules aren't met. Now what you do have is strong side of the triggers with triggers up and room to all the trouble. And what you did is you just jumped the fudge in. I love that. I love that that's a thing. You take 2 off at $180. Nicely done. And all this is the large chart says we're going up strong. Jen says, well, so is my small chart. Let me see if I can jump in and make some money. And she used a 1 down, 1 up bar for entry. And I love this. This is a pattern. When you have strength on both charts, guys, and you see the market try to push down but can't, and then it opens with a higher bar, that's a good pattern for the jump the fudge in with all the momentum. Nicely done, Miss Jen. Let's see what we have here. A little counter trend, base hit, weak top, triggers rolled. So guys, when price reaches a mid-band, this is called the gap theory. On your large chart, and there it is right there as well, which is pretty cool. Who is this? Is this you, Pete? Guys, when price comes from a weak top, not a termination, and there it is right there. You see the same pattern twice. And it gets to the mid-band area, and the large triggers refuse to follow, price is more likely to close the gap to those large triggers. Pete says, check it out. I'm going to let things slow down. I'm going to look at that big ugly gap. I'm going to have momentum, and I'm going to see if I can't close the gap. And you did a good job with it, Pete. And it is counter trend trade. It's a long trade and a downtrend, but it's based on a pattern, guys. And do patterns repeat themselves? Look at it. 2.5 hours apart. Weak triggers that get beyond the fib, pulls all the way back to the mid-band, closes the gap to the large triggers. It's the exact same pattern. So when you stop worrying about the money, you start recognizing the patterns, you start to see the moves within the moves. Nicely done, Pete. All right, this looks like a Victor chart. 1 minute, jumped in. 1 minute jumped to ES as I was posting a loss of -20. Had to start over. 15 minutes stayed. NASDAQ. What is this? This is the NASDAQ. The triggers are up. You're coming from the transition side of the triggers. Is that right? Oh, this is Paul, I think. Coming from the transition. Nothing but room. The market pulls back to the areas. You get an up bar on the correct side of the triggers. And you keep your stop in place, Paul. And you get killed break even. You lost 2 ticks. So let's see. The big pullback would have missed stop by a tick or 2, and I would have been done for the day. However, when will I learn? Hold original position because large chart said you could. And man, there was some crazy stuff right there, Paul. I don't know what it was, but it's the perfect trend trade from 0350. And because it's such a big bar, it makes it a little harder to manage. And I get that. There's times, guys, where you might say that's just too much. That's more risk than I want. That's a lot. What I find, and Paul, here's a pattern. And man, I was looking at this yesterday with somebody. I want to talk about second chances. If you see this giant bar and you're like, man, it's just too much. If that bar prints without odds favorable momentum down, very often they retest before they go. And you sat through the retest, which is beautiful. You didn't miss it. Your stop was perfect. And then it goes back to what we talked about with Victor. As long as you have that odds favorable momentum, you can commit a little bit. Commit to that outer band. This one would have gotten you, but this was a little psychosis pre-market that is unpredictable. But your entry is perfect. And if you didn't take that one, that entry is also perfect. And if you didn't take that one, that entry is also perfect. You were just the first one in. And it just danced. And they're jerk faces for doing it. It just danced. And man, I would rather lose 2 ticks than lose all of that, because I guarantee that happened fast and probably would have slipped. So it's a great trade. It makes sense. You get a close below the triggers. Just didn't go. But great job on that initial stop, keeping you in the game when the market said you're still in the game. I love to celebrate victories, guys. I really do. Weak side, triggers up, pulls back to the areas. Jen, there is your entry. And you say there's no room. From 10 to 13 is pretty tight. And it just doesn't go. It just doesn't go, Jen. And that happens sometimes. Didn't do anything wrong, didn't break any rules, didn't really do much of anything that didn't say it could be done. The only challenge is from the weak side. And guys, this is another one of those things that I've begun to look at. There's not rules for it, but when I come up with something, I like to share it. If I'm on the weak side here, I am disinclined. So let me type out what I've been studying and what I've been looking at, guys, and hopefully this is helpful. If I'm on the weak side here, large chart, I prefer to not trade against odds favorable momentum on the small chart. And it doesn't mean that there's not a trade, but it means that I may not be the first one in on the first close, because what I'm noticing is that they like to retest with this much momentum from a weak side. There's not such a push up that the sellers don't give it another shot. And I think we saw the same thing on Paul's, right? And let me see. With those really strong triggers, sometimes there's a retest. Not always. There's not always a retest. And Jen, this is not a rule or anything to tell you to change what you're doing, right? This is just something that I'm beginning to recognize that I have to put more time in on. But from the weak side, I'm so less inclined to take that trade. And this is a great example. They dance, right? And then there's a much better entry. And the smalls are now above the large, and everything is above trouble. And look at that. So maybe you just supported my hypothesis a little bit. And it's very similar, Jen, to the HVA trade, right? Letting those smalls get to the right side and being okay to miss it if it doesn't happen. So thank you for that. I think that's great. And it got you by a tick, those sons of bitches. But once the smalls get above, right, then it's like, okay, the immediate fight's over. Now I got a better chance of going with a large chart. That's awesome. I love how that came to be. And they did go up, but we are still weak side. And from the weak side, with the triggers rolling, you were getting ready to sell. You forgot was amp. Press sell, which Tradeovate does not sell immediately, just prepares you. Oh, well, it worked. Did you get into multiples? White bar, closes below, strong side is small. Just a quick momentum trade. What a great job on a breakout with momentum, with the triggers down, with room, and you didn't even wait for any pullbacks. You're like, breakout, baby. Boom. Let me get out at those one-to-ones that seem to ruin everybody's good time. Nicely done, Jen. Guys, have you noticed that we haven't seen a lot of the same trades? We're seeing people using advantages and finding different ways to get into the market, finding different ways to capitalize on momentum, finding different ways to take advantage of a clear path. Pete, what'd you do? Home run. I love it. Awesome large chart. Triggers up. Price above trouble. Nothing but blue sky. And Pete, I don't know if you know this. Do you see the strong triggers? Do you see the down bar followed by the up bar that you entered on? That's the exact same pattern that Jen talked about, guys. When everything is strong and you see that down bar followed by an up bar, there it is right there as well. Down bar followed by an up bar. Guys, that's an amazing pattern because it lets you put your stop right below the low bar. There's your down bar again, followed by an up bar. Move your stop, right? Market goes up. Great job, Pete. Awesome trade. And I love home run trades. That went from 49 to 62. That is, holy crap, 23 points at $50 a point at 2 contracts. That's a home run. Nicely done. That one is for the highlight reel. We've got a lot of you guys coming on the highlight reel today, guys. And I have such a good time putting that together. It's silly because it has nothing to do with me. It has everything to do with y'all's hard work. But I really do. I go very proud papa when you guys find success. And maybe more than I should, guys, I don't appreciate your failures. They don't make me mad. I just want to help. I just want to help you guys get better. If you're not comfortable, if you're not consistent, guys, if you're having a challenge, stop watching freaking videos. Reach out to me. And if you're too shy to post in the room, send me a message, guys. Send me a message and let me help, please. Trina, I love that you put your name on here. So Trina says, chili dog, but miscalculated the bar clearing. And that's okay. Doing math. Trina has a strong trending market, which means 30 plus bars in the same direction. No reversal bars. Momentum is implied. The clear path is implied. And Trina jumps the fudge in and just makes the money. And where were you in? You're in at 58. You're out at 61. $150 a contract. 2 contracts. $300 trade. Probably the timestamp never even changed. The timestamp never even changed. Trina, beautiful trade. Nicely done. Tell Wayne we miss his face. All right, Alex. What does the white line stand for in the TradingView platform? So, Alex, help me out. Which white line are we talking about? Are we talking about this white line? We're talking about that bar? It's just an up bar. So what the up bars are, and let me go to the instructions. I love going back to the instructions. Little sound effects there. And I'll show you where you can do more research as well, Alex, but let me give you the answer as well. Give a fish, teach to fish. So under the indicators, under market flow volume analysis, and Alex, if you're curious about white bars and how to use them to your advantage, and everybody in the room, I'm going to drop that video in there as well. But what a white bar is it's a volume breakout. So what a white bar is it's a volume breakout. It means that, okay, the market has gone down. It is broken out. It's overwhelmingly strong in sellers. And all it is it's a breakout bar. As it says, hey, we're going the other direction, and everybody's on board. Does that make sense, Alex? That's the most common. It is just breaking out. And let me show you how you may come to use it. Thank you, Jen. So the market stops going up. The triggers roll. Everything is beginning to go down. And there's your breakout bar to the downside. Do you see that, everybody? When the triggers roll, not only do they roll here, but holy crap, it is seller palooza, right? Everybody's going down. So let's zoom in a little bit, and I want you to see what Jen recognizes. And guys, this is one of those things where when you begin to learn it, you abuse the hell out of it, and you'll make a lot of mistakes with it. Simulator is a great place to practice this. So on every breakout bar, Alex, you're going to see two horizontal lines. These two horizontal lines are the highest concentration of sellers on a breakout bar. Is everybody with me so far? This is the highest volume of sellers, guys. This is where the most sellers got in and said, yes, we're going down, F the buyers. This is exactly where we got together. So what Jen notices and what Jen does is Jen says, well, the next bar opened below that highest concentration of sellers. The next bar, and even over here, opened above that highest concentration of buyers. Guys, this is a pattern when you have a termination condition that sets you up for what we call the HVA trade. When a down bar is confirmed. So if a breakout bar right here is confirmed by an up bar that closes higher, you'll see that green line right at the highest concentration of sellers. You'll see that magenta line right at the highest concentration of sellers, and this is a good example. And what happens is if somebody comes back and retests that area, you understand that that was, without a doubt, where every seller said, I dare you to come back to this price range. This is where we wanted the market to go down. And when the rules are met, when the conditions are right, and guys, they were not right here, this becomes a great opportunity to capitalize. Let's come down to the bottom. See if we can find it. Here we go. From the termination, right here, from the termination, there's your breakout bar. There's the next bar opening above it. And holy crap, Longsville, right? Just boom, off it goes. Guys, this is a great way to catch tops and bottoms. This is a counter trend trade. And if you are brand new, if you're learning the software, if you're still getting your feet under you, you'll notice that there are no counter trend trades on the KISS plan because they're aggressive, because they're assertive. But this is one of the things where I say when you start to learn how to read your indicators, it's going to be helpful. So guys, there's your breakout bar. The next bar opens above. Guys, what direction is the market moving right now? It's moving in the direction of the large chart, isn't it? It's going up. Pretty cool, right? So, Alex, it's an awesome recognition. It's a beautiful question. And there are, without a doubt, ways to capitalize on that pattern. It's imperative that you still have the rules met, that you have a plan. Miss Jen, strong side, above the zone. It did pull back to the outer band. You take the entry. You're in at 94. And it just doesn't go anywhere, does it? Small's below the large, which makes it a little more difficult. And it just doesn't go, Jen. Outer bands, yeah, outer bands can be nice, guys. If your large chart is way beyond the outer bands, if it has been for a while, I love the outer band, Jen, just for continuation. It's kind of that idea when a market is trending strong by the mid band till it stops working, right? But for me, Jen, I don't want to see it just a little bit above. I want to see a market that's been trading outside of the outer band for a while. I want to see a market that has been on an absolute tear to the upside before I put my eggs in the basket on an outer band, because it can hold all day long, but it's not necessarily going to run. And then almost always the market pulls back, right? Almost always the market pulls back. That's a good shot in a strong trending market. I'm not a huge fan, just hoping to pull a trend trade from it. A little annoying. Don't let it be annoying. Let me be annoying. Let me say the same thing over and over till you're sick of me. There will be more trades. There always are, right? There's always another trade. Man, look at the fight all the way down. Blah, it's still going, but that would be hard to make some money on, wouldn't it? Pulled right back to resistance. Every trigger was down. Down it goes. They're fighting. They're fighting. After a fight, which you're starting to enjoy, sit and watch they move. Yeah. I think that when you can say they're fighting, you're getting in tune, right? When you can say that they're fighting, when you can say these guys can't go up or down, I don't want to be a part of the fight. I'm not on the strong side of triggers. I don't want to be a part of the fight. Now, I'll be a part of that fight if they pull back to this mid band. I'll be a part of that fight if they give me a close on the correct side of the triggers. If my rules are met, I'll be a part of that fight. That's funny. What's going on, Yassine? Bull market, bear market, bull market. That's awesome. But that's trading, right? This says up, that says down. These don't agree. Why guess? Why not just wait? Man, if I was any better, it wouldn't be fair to be me. True story. And Paul, they do. They make a lot of money getting everybody in the fight. People with rules, and here's one of the great things. People with rules tend to stay out of the fight. People that know that area could stop the market, that it could create a bounce. How many long or short trades could you take while you hope an area breaks, right? How many counter trend trades could you take before the area actually rolls? And guys, this is your 90%. And you don't have rules to take a trade here. You just don't. I don't give them out. You may have them. But your software pinpoints exactly where the market may turn. Your software gives you the idea of momentum and gives you that potential to break. Your software provides everything that you need to be successful. So look at this. There's momentum. Does everybody see it? There's momentum. Price didn't reach the fib. What did that look like on a smaller, faster chart? That was 8:59. Was that today? Whoops. That was a big scroll. Hold on. I don't think that was today. Oh, it sure was. Look at that. It was a pullback to a mid-band inside of triggers. Did anybody catch that at 9 a.m. this morning on the S&P? Because it's perfect. First, it's momentum. Price didn't reach the fib. It came close, but it didn't. There's your pullback. It went right to the mid-band, and then it finished the move down with all that momentum. Pretty cool, right? Guys, this happened. The hardest thing you'll ever do is absolutely nothing. The hardest thing to do as a trader is to sit on your hands and say, you know what, my advantage isn't there, I choose not to trade. To sit on your hands and say, this area could stop the market, I don't know if it will stop the market, and since I don't know, I choose to do nothing. I think for traders, everybody's familiar with the fear of missing out, right? The fear of the market going without you, the fear of the market not paying you, the fear of the market just going and you've got nothing. Guys, that's a real fear. I want to show you something. Crude oil has done all of this today. There's been opportunity since crude oil has been open. The S&P has done, hold on, all of this today, there has been opportunity. The S&P trades $174 million a day on average. The futures markets exchange billions every day on average, hourly. If you can find a way, segue to the daily goals sheet, if you can find a way to capture $400 a day, that's it, $400 a day on average over the course of a trading year, it's six figures. Six figures. There is no doubt in my mind, and guys, I say this from a place of conviction, of confidence. There is no doubt in my mind that if you learn how to keep it simple, if you learn how to be patient, if you learn how to follow a plan, I don't think 7, 8, 900 a day is unrealistic. With good management, I don't think it's unrealistic. On a 2-lot, I don't think it's unrealistic. But the challenge for most of us is that we can't even do this yet. And we're chasing that, right? I can't figure out how to make $200 a day because I'm breaking rules. I can't figure out how to make $200 a day because I don't understand ClearPath. I don't get momentum. I can't define an entry. But I believe, because I own the software, I should be making $1,000 a day. And guys, the idea is that you learn the process. The process yields results. The process gives you advantages. The process gets you squared away. This is barely closed above. It's from the mid-band. It's the correct side of the triggers. It's not fighting weakness. You're in the transition. You have room. Jen, what did it do? Hasn't taken your stop out yet, has it? You guys want to see what happens? That may be more risk than Jen's willing to give. But it fit the rules. That's your long trade. Triggers up, transition, nothing in the way, pull back to the area, close on the correct side. If you're not cool with something, guys, that's okay. If you're brand new, you're on simulator, I hope. And if you're brand new, it's okay to take them all. And if you're brand new, I'm going to get off of my live account because this is an educational room and I don't want you to think that we're doing things live. If you're brand new, you should be in this trade. Your stop should be where the market shouldn't go. And if you are managing because it's transition, you may say that this is my first potential area for a bounce. I'll choose to get paid there. I'll put my second target, I don't know, maybe at the next level of trouble. And you're in the trade. Can you put the square again on that pullback? Sergio, which one are we talking about? To see what happened on the small chart? Oh, on the other, on NinjaTrader? For sure. I don't remember which one it was, but there we go. That was the one right there, right? You want to do an entry together, Sergio? You're getting stuck on those moments all the time. All right, so watch this. Let me back this up. Boom, 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 boom. Let's do it together. You're missing those trades? All right, let me show you how, if you will learn the language for the entry, Sergio, and I'm going to go right here. If you'll learn the language, so the language for the high probability trend trade entry, guys, this is why I type it in the room, and this is why I'm very, very specific. It says, if you have momentum, and Sergio, do you see that you have momentum? That's the first step. If you have a clear path, price has not reached the fib. It's close, right? But if your entry comes from up here, you'll still have plenty of room. If I have momentum, if I have path, my job is to wait for the reversal bar on the small chart. And Sergio, this is the language that I want you to learn. And do you notice that I don't have the reversal bar yet? This is the magic phrase. I will sell a pullback at an area inside of triggers. I want you to learn this phrase, Sergio. I want you to write it down, and every time your large chart rules are met, I want you to see something. You're looking for a short trade right now. There's your triggers. Before the reversal bar, can we agree that if I get a reversal bar, the market is most likely to retrace somewhere from the bottom of the triggers to the top of the triggers? Does that make sense, everybody? My NinjaTrader users, you know this as part of the entry concept. Trigger lines define retracement. Sergio, are you with me so far? Okay. So where do trades originate? At an area inside of that retracement zone. So Sergio, before the reversal bar, I've got one area inside of triggers. Does that make sense? I've got one area inside of triggers. Well, the market's trading in the wrong spot. I can activate a limit order just below that area before the reversal bar ever prints, Sergio. Does that make sense? So check it out. The market continues down. As it does, so does the midband. I may have to move my entry. As the market continues down before the reversal bar, so does my midband. I may have to move my entry. But nothing has changed. I still only have one area inside of triggers. And guys, I'm a language nerd. But I think that if you say, my entry comes from an area inside of triggers, Sergio, do you see how you've only got one option? That's it. There's no confusion. That is the only area. Let's do this. Let's keep the triggers moving. That is the only area inside of triggers. That is the only spot my trend trade can come from. Does that make sense? Guys, are you with me? And there's your reversal bar, Sergio. And you knew about that midband for the past 7 bars. You knew exactly where your trade would have to come from for the last 8 minutes. You had 8 minutes to wait for that reversal bar. And when you had that reversal bar, dude, your limit order is already activated. You're already waiting for them. You can't miss it. You know where that trade comes from. And the cool thing is you know where your stop has to go before you ever take that trade. Because it's right in the KISS plan for you. And then they come up, and then they hit your entry, and they go through it a little bit, and Sergio, you're like, oh shit, pardon my French. Sorry, some days I cuss more than others. I'm trying to stop. And you're like, oh no, I'm negative. What am I going to do? And then you're going to remind yourself, Sergio, the market may retrace all the way to the top of these triggers, but it's likely to bounce here. I'm cool. I still have an advantage. And then they go up again, and you're mad at me, and you're already starting to think out your strongly worded email. Dang it, Mark. Every day you teach area inside of triggers, and your brain is going to forget that if you're in the retracement zone, you're still cool. And then they're going to go up again, and you're going to call your cousin, and Adriana's going to send me a nasty email. Oops. And then I'm going to click the wrong button. Dang it, I did it again. Can't have nice things. Here we go. And then it gives you a reversal bar. And you knew about it. You knew about the trade all the way over here. You knew exactly where the trade would come from long before it got there. You knew exactly where your stop was, and if you're following the KISS plan, now you've got virtually no risk on the trade. It's already going the direction you wanted it to go, and sure enough, down it goes. So Sergio, if you want to slow down the market, if you want to never miss your entry, let's see if we can find another. Here we go. 2006, I believe that is. Let me back it up. Let me put a circle on there just so I can find it. Is this helpful, NinjaTrader users? Look at all that stuff that happens on a small chart. I missed it. All right, let's get the cheaters off. Does everybody see momentum and path? That's the most important part. Is the market going in the direction of the trend with ferocity and nothing in the way? Time to go find an entry, guys. Market's going down. Where are my triggers? That's them. Do I have any areas inside of them? Not yet. But I'm looking. And the market goes down. Right? And nothing changes. And then everything rolls. And I know exactly where I'm looking long before this ever happens. And Sergio, where's your entry going to come from if you get a reversal bar? I want to show you guys how smart you can be. Where is the area inside of triggers? Guys, anybody, jump in. Help me out. Let me know that you see it. These are the best lessons, guys. This is what this class is designed for. When you come to me telling me you can't time your entries, I'm going to give you a way to do it. Sergio, did you leave me? Jen says the mid band. Do you see that mid band inside of triggers? So ask yourself, Sergio, if the language, and this is important, if I'm going to sell a pullback at an area inside of triggers, do you see how I've got one option again? I've got one option. I've got one spot, one area, one line. It is one tick wide. And before the reversal bar prints, I know exactly where my trade needs to come from that mid band inside of triggers. And the market continues down. And there's my reversal bar, Sergio. And now I know without question, I have to activate my limit order just below that mid band. And I had, once again, this is the middle of the night, I had about 2 minutes to be ready for it. And what happens? The market comes up and it hits it and the market goes down and they say, oh no, we forgot Sergio. Let's go get him. All right, now we can go down. And down it goes with all that momentum, guys. And the top of that move is the top of that tail. So if you're struggling with entries, if you're struggling with timing, if you're struggling with anything at all, guys, give me the opportunity to help. Because with 3 triggers through in momentum, even if this wasn't your trade, area inside of triggers, 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 termination, pushes it up, right? It's the same thing all day. Was that helpful, Sergio? Sorry, like we've been hanging out our whole lives. Cool. You're welcome, guys. I tell you every day, the only thing I want is for you guys to get more confident. The only thing that I want is for you guys to feel better about what you're doing, to be more confident, to be more assertive when it's right, and to be more patient when it's not. And that's what you can do. So good stuff. Miss Jen, what did you do? We saw that one. That was the entry. Hold on. I left that trade running, didn't I? First target hit. First target hit. We still have the second one. Can we go break even now? But Jen, how cool is it? How cool is it, guys? I don't have to form an opinion about this entry. It's the right entry. It's the rules-based entry. And in my opinion, screws me up all the time. My opinion messes up my trading. Sometimes. Jen, will you write that down on a piece of paper, mail it to my wife? She'll never believe it. This is exciting. But I talk about this every day, guys. And I do this because I've been where you are. I've been where you are. I've been fearful of entries instead of just taking the right entries. I've been fearful. And Jen, I love that you got back in and that zone showed up. And I love that you got back in and I love that you got paid. And there's nothing wrong with the patience that you exercised at all. But the reality is, if it's the right trade, it's the right trade. There's those one-to-ones. That wasn't a hold forever trade by any means, but that's cool. We still got in 4 at 86, and we made 14, 16, 320, $720 up to trouble, and break even on the second half, guys. I'll take that all day long. I'll take that all day long. I should have kept that on my live account. But rules are rules. And when you trust your rules, and Jen, thank you so much for doing that. Guys, if you trust your rules, you take that trade. If you trust your pattern, you take that trade. If you believe that from the transition, that mid-band could stop things, you get paid right there. I'm sorry, that HVA could potentially stop things. You get paid right there. And Jen, it's beautiful. What a great trade. You were in at 92 and you were out at 02, and that's a $400 trade. And Jen, I love this. You waited for the smalls to roll. You said, I got plenty of room. If I take this trade, I've still got an enormous amount of room, but now I've got small chart momentum on my side. That is patience. And I had that talk with someone yesterday. If you don't like the look against it, if you don't feel comfortable, let them roll, because now you're not fighting anything, and everything says up. And nice job. Bravo. Paul, 15's up. Transition. It's clear. Close on the correct side. Paid at trouble. My goodness gracious, Paul. Born again. Born again trader. Absolutely, Aaron. Paul, outstanding. Entering with rules is success. It's like jumping out of a perfectly good aircraft with a chute. So, Aaron, every day, man. Are you on NinjaTrader or are you on TradingView? Let me make sure I get you the right set of rules. Paul, I might change my trip back to Texas to swing through Arizona and high five you. So on NinjaTrader, Aaron, let me give it to you real quick. This is the KISS plan. And let me go through what it does for you. And Aaron, I'm not sure how long you've been with me. I know you're a lifetime member. The KISS plan, and this phrase right here is consistent on both plans, guys. It's a stepping stone in your learning journey. It's designed to teach you how to read indicators. And these trades that are on here, these simple checklists are designed to optimize your chances of success. And then it'll be through study, simulation, class feedback, and practice. You'll write a plan that suits your needs. So Aaron, for NinjaTrader, it's 2 charts. It tells you where to find your rules. It gives you a checklist for entry. It gives you a way to manage it conservatively, to learn how to get paid, to know where your stops go. And it gives you a second trade, a medium probability trade. So there it is. I just dropped it in the chat box. Now your job will be to learn the rules. And your job will be to learn the patterns. And your job will be to build trust. But as you do that, my friend, I'm also giving you this spreadsheet. And guys, I give these out at the beginning of every day, and usually multiple times. So rule number 1 says strong triggers. Here's over 50 pictures of strong triggers. In the green, bright green, green means go, right? And in red, what it means to not have them met, rules met, not met, there's your entry. Also, and I love this, boom, boom, boom. So check this out. If you go to the spreadsheet and you click on these client trades, guys, what you'll notice, Aaron and everybody in the room, is that with momentum, with path, you can take a pullback to an area and look at them using the language. Look at them using the checklist. That's your pattern. Over and over. Here's another one. Momentum and path, pull back to the area inside of triggers. I mean, come on. Can it be that easy? So every morning, my first hour is going over the rules. Every morning, my first hour is breaking them down individually. Every morning, my first hour is literally handing you everything that you need to find success with the software. Your job is to learn these rules. And then, Paul, can I go back to what Paul said? Paul said entering with rules is success. And then Paul, I believe that that you fought rules for a while, right? That you tried to trade Paul's plan, not the plan that was proven, and that's what I did for months on end, guys, and it didn't serve me. And there's this aha moment, and Paul, it sounds like it's clicked. There's this aha moment, and I love that phrase, the aha moment, because you literally say aha, where you realize that you've been making it so much harder than it needs to be. When you realize that you've been fighting, whether it's out of ego, bravado, opinion, right? And then you have this aha moment because you catch 4 or 5 of these in a row, and you're like, holy shnikes, I don't need all the trades. I need the best trades. And guys, we all fight. Everybody fights, but we all fight, and we finally submit at different times. And then you go back to fighting, right? Then you go back to fighting. Is there anyone in the room that doesn't break the rules at least 2 or 3 times a week? I do. I know I do. I'll tell you I do. And I usually get my ass kicked when I do. Miss Trina, have an amazing day. Great trade today. You now, Cindy? You guys want to talk about that? And Aaron, let me read. Thank you. You've been actively simulated trading for the past week and a half now. Last week you actually did pretty well. But this week you got your butt kicked because of, yes, not following the rules like I should have been. We've all been there. Study harder. And guys, let me tell you something. And Aaron, let me tell you something. You don't have to go it alone. You don't. It's harder if you do. You could watch all the videos, right? You could watch every video on the Nexgen page and still be confused. You could watch every picture of every winner and still be confused. You could listen from the sidelines and still be confused. And I encourage you guys, if you will just post in the room, if you will just show me what you're doing, if you will just talk about your chart read, if you will just annotate your charts, guys, there is not one problem that you can face that I can't fix, that I haven't already broken the rules for, and I haven't already found a way to work around it. It's hard. It is so stinking hard to post in this room. It's even harder to post losers, guys. But if you do, you get a private session. So Miss Cindy, termination reverses the market. It's a good stop. You say it's not strong triggers, and I agree. That's not your best look of momentum, Miss Cindy. But I don't think you got lucky. And can I talk about why? Of course I can. I have the microphone. Because when a termination condition reverses the market, Cindy, that's huge, right? That's impactful. And they did it here too. That's the actual termination that reversed the market. And then Cindy, they came back, they tested it, and your large triggers didn't blink, and your small triggers rolled. And everything about your large chart said we're more likely to go down than we are to go up. Would you agree, Cindy? Does that make sense? What a great chart read. And then over here, Cindy said, well, wait a second. If everything on my large chart says down, if everything on my large chart is pointing south, and then everything on my small chart is pointed down, and I've got strong triggers, and I've got areas inside of those triggers, and I've got a place to put my stop, hell, I'm going to see if it's really going to go down. And I think you did it beautifully. I think you did an amazing job on it. And I think that you utilized the basic read of a termination that reverses the market. And you use the idea that red is down. And you use the idea that when everything agrees, there's opportunity. And Cindy, I think you did a beautiful job with this trade. And I think you should high five yourself. Because you're at a point where you're beginning to recognize advantages instinctively. Why were you nervous? You were nervous because you knew you didn't have strong triggers, right? Do you know what that nerve is, Cindy? That's your body saying it's not perfect. It's not the perfect trade. But there's a way to take it and manage it. So you take this trade, right? Do you notice that there's no divergence? That there's no divergence? That there's strong triggers? That it's not high risk, right? So Cindy, because you're nervous on the entry, let's do a hypothetical. If you got another divergence from right here, could you exit the trade? Because the momentum isn't perfect. Of course. If it blew through the triggers, could you exit the trade? Because it isn't perfect. Take and manage, guys, is the next step. It's the progression. Take and manage. I know that it's not perfect. I know it's not a high probability trade, but you had path, you had entry, and you just took and managed. I love it. I think you did a great job. And guys, this is one of the things that posting in the room does for you as well. Sometimes you think you're way out in left field when the reality is, what a good looking trade. Pete, everything says down, you get below trouble, everything says down, and Pete jumps in, gets paid. There's that darn just jump the fudge in trade again when everything says down. So Cindy, it's a smaller version of what you did. When every indicator says something, that's what's most likely to happen. All right, Miss Jen. Termination. White bar off of the termination. And you get in. And you get out of trouble. I love it. It's counter trend. No, it's not. It's with the trend. You don't have a small chart area, so it's not a trend trade, right? The triggers are up. You're on the weak side of the triggers. Jen, it's odds favorable momentum down. And you went long based on the bar pattern. And you managed assertively because from the weak side with strong triggers, hell, I almost would have just sold the HVA. But there's nowhere to go down. Yeah, that's aggressive. I'm glad it worked. This is your husband's trade. I'm going to annotate it up with every bad Spanish word I know, and I want you to give it back to him, okay? Just kidding. That's not your husband's trade, Cindy. That's your trade. I know all the bad words. Sometimes, guys, your pictures stick to the clipboard. At least I'm paying attention, right, Cindy? At least I recognize that was your trade. You know what's fun for me? And this is just me. Are you going to give me his, though? I'm waiting. I got it. And guys, I don't care where you're at in regards to church or whatever, but if you've ever been to church, and have you ever sat in the pew and it feels like he's talking directly to you or she's talking directly to you, and it feels like that message put a spotlight on you? I've had that. But it happens in this room as well, guys. When I talk about participation and you feel like maybe you should participate, that's just your body going, hey, listen, there's an easier way. All right, so let's see what happened here. So ask your husband, why is it a good bottom? I don't see any termination conditions that it reversed from. I disagree. I feel like that's a weak bottom, Cindy, because that wasn't a termination condition. Does that make sense? So here, we're going to give this back to him because his large chart read is where the challenge happened. Okay, cool. So a good bottom, a strong bottom, is a termination that reverses the market. This is a weak bottom. Okay, this is a weak bottom because it was not a termination condition first. And I'm going to give this picture back to you too, so he doesn't just have to go off the words. So weak bottom. The second challenge is the midband is a termination condition if it is reached and the large triggers are a full bar away. That's the gap theory. More likely to close the gap from a weak bottom. So he did have strong triggers, but the midband's behaving as a termination condition because price is likely to close the gap back to the triggers. The one-to-ones, he's right, it's a 50-50, but from a weak bottom, the one-to-ones are less likely to break. The midband is behaving as a termination, so the only thing working here is momentum. Now on the small chart, watch how this works. Trades directly, so the midband's a termination. He's in well above the triggers, so he should instantly believe that the market's going to pull back to the triggers, right? And then they try to go with that momentum. Great place for stop movement. And then what do? They suck right back to the triggers, exactly like we would expect in the gap theory. And his trade gets run over. And he says terrible risk management. Must exit around here. I don't disagree. And divergence on a 50-50 is a huge killer. A lower pivot with divergence is an even bigger killer. But I think that this is one of those times where the large chart read should keep you out of that long trade way up here. Because the midband's a termination, the triggers are way far away, and it's coming from a weak bottom. I hope that all made sense. This is a good lesson. This is a great lesson. Momentum is amazing, but there's other things that come into it. Good stuff. And I think that's the biggest thing right there, and Pete's right. Because it's the weak bottom, the gap theory is more likely to work. And let's see if we can find a real world example of that. I don't know what the market's been doing today. From a weak top, the gap theory is more likely to work. From a weak top, it's more likely to snap back. From a weak top, it's more likely to snap back. Do you guys see that? Pretty consistent, right? From a weak top, more likely to snap back. From a weak top, even there it snaps back. From a weak top, snaps back. So the gap theory, guys, is a great way to not get caught from a weak top or bottom. It's a little extra help. And if you need help on the gap theory, yep, you guessed it. You're going to find it right in that spreadsheet. And there are tons of them on the gap theory right here that'll help with that recognition. So, Cindy, tell him you love him. He did a good job, but it's an avoidable mistake. And he'll think about it more next time he takes that trade, right? Next time he's trading near a mid band, he's going to go, wait a minute, what's up with that gap theory? Is that gap theory in play? And that's one of the cool things about what we do, guys, is it's just patterns. Over and over. It's just patterns. And Miss Jen, there's your same pattern, but this time with strong triggers. Jen's in a trade right now. She took the first shot from the termination condition against momentum and it didn't work. And then Jen, there's the exact same bar pattern. There's the exact same open above, but this time with strength, off it goes, huh? A little easier. Not a lot of room to those one-to-ones in the mid-band, though. It's funny how often that happens. It really is. It's interesting how often the first shot that fights a little bit and the second shot that doesn't fight as much, they're almost the same price almost every time. You didn't take it? Oh, because it was in the zone? Good job. Nice job, Jen. All right, so let's do some trading view reads. Large chart, and I love this, and let's just freeze it right in the moment before it turned. Do you guys see how it's neither up or down? I mean, technically, it hasn't rolled down. You'd have to call it up, but it's flat, right? Change could be coming. Stuff could be going down. It could be going up. We'll know in a minute or two. And then eventually, it does go down. So if you were still trying longs and indecision, it probably didn't work out. But now they're down. So here's our read. The triggers are down. I'm on the strong side of the triggers, and I have nothing but daylight to the first sign of trouble. Does everybody see it? It says go look for an entry. But I also want you guys to see this. This is the zone that could be problematic. Right there. So if I take an entry, I want to be below that trouble, guys. I want to be away from that zone. I don't want to be inside of that zone. Does that make sense? I use trend lines to help me when it's close. And what I'm saying is if it pulls back to the mid band, I'm trading directly into the bottom of that zone. That's not my trade. So I go into 90% zone, guys. I need it to push further. I need my pullback to happen below that zone. That's a little safeguard right there. I love using the trend line to help define the areas that could be problematic on the large chart so I can see them visually on the small chart. S&P says down, says strong side, nowhere to go, directly into a VWAP. The VWAP held last time. Guys, brick wall. Let it get below that area before you look for a trade. That's what the rules say. Triggers down, transition, room back to trouble. Where's my small chart? There it is. If I were going to take a trade because these small triggers rolled, it would have to be on a pullback to the zone, right? And when it gets to the zone, I would need a close on the correct side of the triggers. And if I wait for a close on the correct side of the triggers, I'm directly into an area. So, guys, what I'm hoping right now is that this market pushes up just a little bit higher, gives me a better entry, gives me a higher probability entry. Gold has disappeared from the face of the earth. Let's stretch it out. Gold says down. Gold is on the strong side of those down triggers. Whoops. dun, dun. Small chart says down. If you took the close on the correct side of the triggers, you had about $100 before you got to trouble. You may choose to manage, but it's more likely to break from the strong side. Guys, that was your entry right there. Well, actually, probably that one below the 1-to-1s. So now we're down. Now we're strong side. Look at it, push. I just wish they would come back and get me. I've got all the room down. Do you guys see the strong triggers on the small chart? Smalls below the large, space between. This is your look. Triggers are down, strong side of the triggers, room to trouble, odds favorable momentum. Hell, I could activate, whoops. I could activate a limit order right at the bottom of that zone. I would know exactly where my stop goes before it ever gets there. This is the only time I'll use a limit order, guys. Broken below, odds favorable momentum, strong side. That's what your limit order is going to look like. You'll know exactly where your stop belongs. You've got all the momentum. The only thing you don't have is them pushing back up to test that zone. Does that make sense, guys? This is your momentum trade setup. Doesn't guarantee a trade, but the rules are met. And if I hit that VWAP, it's over. Hopefully this guy gives me a bounce to get me to my trade. That's trading. Here we go. Triggers down. Strong side of the triggers. Room to trouble. Let's get that pullback. Wouldn't it be magical to get a pullback right to that mid band if it's about right here, right to that HBA, get it closed below the triggers and have nothing but room to get there? Guys, I know exactly what needs to happen before it ever happens. I know exactly what I'm looking for before it ever happens. Why? Because I know my rules. Because I know my rules. All right, Yassine? The market was going up. You're going up with it. You're waiting at the outer band, and you're not going to give it back. Rocking the Bitcoin, huh? Little scalp trade. I like it. Oh, and you did take half your profits, and you can't lose. How cool is that? Nicely done, man. Nicely done. Miss Cindy. Strong triggers, 2 triggers through, pull back to the area, you get paid at trouble, out at trouble. Nicely done. Profits protected. I love that phrase, Miss Cindy. Profits protected. My job as a day trader is to get paid. My job as a day trader is to win more than I lose. My job as a day trader is to give myself the benefit of an edge, of an advantage, to do the same thing every time. That happens to be your job as well.